There's a question on the screen. Excerpts from the statement of financial position for Markham Corp as of April 30, 2021 are presented below. We have a list of current assets given: cash, accounts receivable, and inventories, total current assets. Also, we have accounts payable, accrued liabilities, and total current liabilities are given. There's a scenario given here which says the board of directors of Markham met on May 5, 2021 and declared a quarterly cash dividend in the amount of $800,000. The dividend was paid on May 28th to shareholders of record as of May 15, 2021. Assume that the only transactions that affected Markham during May 2021 were the dividend transactions and that the closing entries have been made. We are asked to comment about Markham's current ratio would be. See, there are two things that have happened during the month of May. One, initially, as on May 5, 2001, dividend was declared. So, what happens when dividend is declared? What are the effects that get affected on account of that? See, when dividend was declared on May 5, 2001, 800,000. See, the impact of this transaction would be there is a new current liability created called as dividend payable. It would be credited and this same amount would be debited from retained earnings. So now we have the total current assets given as 5,310,000 and total current liabilities are given as 2,067,000. So what will be the impact on the current ratio? So the impact on current ratio is we see that a new current liability is created to the extent of 800,000. So when we add this 800,000 to 2,067,000 and the current ratio value stands now at 1.85 times. Done. Then eventually the dividend was paid on May 28th, but the um, transaction was off record as of May 15, 2001. Done. But this was during the month of May. So when dividend was actually paid on May 28, 2001 during the month of May, basically. What's the impact of this transaction? The current liability dividend payable, specifically dividend payable, whatever was credited will now have to be debited and current liabilities will decrease by 800,000. Since the payment was made, we see that cash balance also will be reduced. It will decrease by 800,000. So cash balance would be credited and will decrease by 800,000. See, so the impact of that on the current ratio, because the question is about current ratio. So we see that current assets as of now stand at 5,310,000. That will decrease by 800,000. Now the new current liabilities on declaration of dividend stand at 2,867,000. That will reduce by 800,000. So it will go back to the old figure, which is 2,067,000. So the new current ratio here, we see that it is 2.18 times. Okay. So the options that are given are, we see that one thing is on dividend declaration, what happened, on dividend payment, what happened. So the discussion is between these two. Okay, there is one thing called as dividend declaration, what happened on dividend declaration and what happened on dividend payment. See, when the dividend transaction, the closing entries, basically the only transaction that affected Markham during May 2001 where the dividend transaction and the closing entries have been made. So at the end of it, so during the month, dividend declared has increased. Initially on May 5th, it was increased, which was increased by the end of the month, it has decreased. That is the important point what we have to remember. Then payment is now increased. Earlier there was no payment, but now on account of payment of dividend payment has increased. So that clarity should be there. Dividend declaration which happened during the month, that is very specifically on May 5th, now by the end of the month has decreased and the payment is now increased. So cash amount is going out, cash balance is decreasing, but the payment is increasing. Okay. On that note, we see that option A is the right answer. Okay. B would be wrong because dividend declaration is not increased at the end of the month. It increased during the month, that is on May 5th, but by the end of the month, on payment of the dividend, it has, okay, decreased, not increased. Increased was initial, by the end of the month, it decreased. And unchanged by the dividend payment also would be wrong because dividend payment is actually increasing. Unchanged by that would be wrong. Unchanged by the dividend declaration and decreased by the dividend payment. This one also would be wrong. So the right answer is option A. I hope that is clear.